Snapchat stock is at one of the lowest points that it's ever been, leaving many people wondering, is this the best time to actually buy shares of the company? But to answer this question, we must talk about what the company has to do to turn this around. Today, we're talking about Snapchat stock and my price prediction for this company. Snapchat is still an advertising company. Substantially, all of its revenue comes from ads. Even in 2024, this represented about 90% of the company's revenue. That focus is both the strength and the risk. And the audience is young. We're talking about 469 million people that use Snapchat daily, who are predominantly Gen Z and millennials. That kind of reach is rare and quite valuable. But while the ad market is growing, it cannot grow at 20% forever. In fact, now credible forecasts point to mid to single low double digits. This is the backdrop that Snapchat is going to be operating with, which means that for the company, everything is about execution. Snap's 2024 revenue grew to about 5.36 billion, and on a trailing basis, it's around 5.6 billion today. And more importantly, free cash flow has finally turned positive in recent quarters. That's the difference between story and business. But while this is positive, the company is still losing money on a GAAP basis. And on top of that, there's real debt to worry about. We're talking about total debt of around 3.5 billion and cash of only 3.2 billion. This is significant leverage where discipline for the company is not optional. Last year, Wall Street questioned Snap outlook and ad competitiveness versus other platforms such as Meta, TikTok, Google, and others. And that pressure has not disappeared. One more thing that can turn everything around for the company. And yes, we're talking about augmented reality and the company's glasses. Right now, the company has the 5th generation of its spectacles, but today they're only focused on developers, not consumers. Battery life, comfort, and the use cases still need work. There are many reports pointing to a possible consumer launch around 2026, and if Snaps pulls this off, it's an option on a new platform and a new way to generate monetization for the company. However, if this is not successful, the company will have wasted billions of dollars in research and development, and the core ad engine or business of the company will have to carry everything over. Personally, I don't see the near-term success in AR glasses for Snap, but if you do, this is your upside kicker. Moving forward, here are the most important metrics that matter for the company. First, daily active users. Right now, this number is about 469 million. However, the growth of that number will significantly impact the company's revenue and profitability. Then we also have the average revenue per customer and the ads ROI. And this is the lever that allows the company to profit from its existing customers and generate profit from the advertisers that fund the whole business. On top of that, we have free cash flow, which keeps the company operating, and the company's net debt, where the company has to be very careful not to increase this number, but rather to manage it and bring it down. For the analysis of this video, if I had to copy and paste every single number that you can see on my screen, this would be an absolute pain in the ass. For this, I use Wisesheets, which allows you to enter a company, select annual or quarterly data, click on Get Data, and allows you to see all of the different data and metrics that you can see on the screen right now. But most importantly, it allows you to make function calls like this directly into Excel so you can get all the data that you need dynamically for your spreadsheet to do your analysis very quickly. As you can see, this is my price prediction for the company, where I estimate the company's revenue growth to be about 12%. Now, this could be a little bit higher. It could also be a little bit lower, so be careful with this number. This is based on forecasts from analysts as well as past historical growth and what the company forecasts in the future. Then we have the terminal price to sales ratio, and yes, this number is quite low, but this is because of the risk that the company carries with the high debt and the lack of profitability. And when I compare the company's metrics with some of its other competitors that you can see right now, I think the number is quite reasonable. The discount rate is 50%. Again, this is to compensate for the level of risk for the company. And as you can see, my price prediction for the company is to be somewhere around $7.31. If I look at the current stock price and I refresh it right now, you can see that the stock is currently trading at $7 per share roughly, leaving you with an upside percentage of around 4%. Now, while I believe the valuation to be quite fair, I don't personally believe in building a position for myself in this company, and this is because I think there are better deals out there with companies that have less risk and more potential growth. But there are a few things that can definitely prove me wrong. And this is if faster ad stack improvements help to increase the average revenue per customer as well as conversion rates, or if the company's AR glasses turn out to be next level and consumers really start to adopt them. If you've enjoyed this video, make sure to subscribe to the channel and let me know in the comments what you're doing about Snapchat stock. And by the way, if you want my free valuation spreadsheet for Snapchat so you can try it for yourself, just make sure to comment spreadsheet and my team will send it to you for free. I'll see you in the next one.